In this video, I want to highlight the importance of position size. Okay, so this is a daily time frame chart of Castrol India. As you can see, the market is coming down. I have taken the low of this candle and drawn this support line. And as you can see, you have this candle which is called as the inverted hammer. An inverted hammer is a bullish reversal pattern. However, there is a condition to the inverted hammer. You can initiate a trade on that pattern only if the next candle closes above the close of that inverted hammer. Unless that condition is satisfied, you are not allowed to take the trade. And of all the bullish patterns, there are some bullish patterns which are strong and there are some bullish patterns that are weak. This falls within the weak group of bullish patterns. Why? Because of this long upper shadow of the inverted hammer. Longer the upper shadow, more bearish it is. However, if this kind of a candle comes after a downtrend, it is actually bullish. It sounds counterintuitive. That is the reason why we have to wait for a confirmation. Okay, and this inverted hammer beautifully tests or confirms the prior support level. Any candle that opens below the support level but closes above it itself is very bullish in nature. You combine that knowledge with the fact that this is an inverted hammer, then you are looking at a fantastic trade. So let's see what happens next. As you can see, the bullish implication of the inverted hammer gets confirmed by the close of this candle. Even though this candle has a long upper shadow, it is confirming the bullish implication of the inverted hammer. But as I told you, there are strong patterns and there are weak patterns. Since this is a weak pattern, I would control my position size while taking the trade. So let's say I want to buy 100 shares of Castrol. So in this case, what I would do is I would take the entry here. I will put my stop loss at the low of this candle. Here, instead of buying 100, I would buy 25 shares. And I would wait for another candle to confirm my view. Okay, if the next candle closes above this candle, then probably the market is moving in the right direction as I anticipate, and it might probably hit this target. So I can do something called as scaling in. Some people call it pyramiding also, where you add to the position as the market keeps confirming your view. So here I buy 25 shares and look what happens. At the close of this candle, I could add 75 more shares. So I am giving away on the reward to risk ratio. When I am buying here, my entry is here, my stop loss is here. So my distance between entry and stop loss for these 75 shares is large. However, the probability that the market will go in my favor is very high. So I am sacrificing on the reward to risk to increase the probability of my trade. So that's how you control your position size. And I teach this stuff in my Japanese candlesticks trading mastery program. It's a world-class, highly popular digital course, video course. It has more than 32,000 students now. It has more than 1,000 chart examples. Students from 170 countries are already enrolled in the program. So go to that link and I teach all this stuff. Just on the inverted hammer, I have 20 videos, okay, just to illustrate that pattern so that it gets cemented in your mind. And look at the precision of Japanese candlesticks. At this candle, your target is achieved. So people who bought here, knowing that this was an inverted hammer and this was a confirmation of the bullish implication of the inverted hammer, people who bought here could have attained that target within a month or so. So you're looking at from late March till beginning of May. So that's the power of position sizing. You can control your risk with your position size. You can add to your position later as the market keeps confirming your view. And I teach this in my training program. So go to that link. You will find fantastic resources there.